All right, so what is the broader message coming through? Has the moment arrived for India as far as shareholder activism is concerned? I have a fantastic panel for you this evening. Hetal Dalal, President and COO of IiAS, is with us on the show. We will be speaking to J.N Gupta, founder and MD SES, and also former executive director at SEBI. Anil Singhvi of ICAN Investments will also be with us on the show, and we will be also talking to T.V Mohandas Pai. So, Hetal, let me begin by getting your take on specifically the Balaji Telefilms case. Now, what was unusual about this is that the promoters didn't really vote in this case, nor did large institutional investors, because in a lot of cases, even if minority shareholders speak up and vote against a proposal that the promoters want, the promoters have enough shareholding to eventually get their way. In this case, there was no vote by the promoters.
Oh, indeed, this is extremely strange. What's happened is, like you said, the promoters haven't voted. They have 24% shareholding with Reliance Industries, which is classified as a public shareholder but did not vote. Roughly about 18% is institutional voting, and that also did not vote. So it's only a bunch of retail shareholders who looks like who actually voted. So if you look at the numbers, right, they have, I mean, effectively the total voting percentage is 0.21, which is extremely low. And therefore, you had at a freak level, you had this resolution getting defeated because of a very, very low turnout. Ideally, if you had looked at a larger voting percentage, it remains to be seen whether indeed that resolution would have been defeated.
Yeah. So, Hetal, give us a sense of why we are seeing this trend. We've seen this in 3 or 4 cases, especially when it comes to remuneration of top management. Where is this point of view coming from?
So I think there are 2 things that investors look at, right? One is, of course, pay versus performance. So, in the COVID crisis, companies haven't been doing well. And naturally so, you've seen a lot of companies take hits. And therefore, investors want to see that you're able to bring back the company to its previous profitability levels. You're out of the woods, or at least you've been able to navigate the business differently, create more flexibility, become agile, and bring back revenues and profits. And sure enough, if executive remuneration therefore goes up, I don't think investors are really sort of too concerned. The other issue, of course, is what we are seeing in terms of, the differential treatment between board pay vis-a-vis how employees are being treated. I mean, we've all gone through we all know about the whole labor crisis, the exodus which has happened, the fact that a lot of employees were taking pay cuts, or, some of them were even let go. Sure, corporates then came around saying that, this may have been, we finally realized that we could build in greater efficiency. But when the things sort of started coming back to normal, employees still continue to either be laid off or get a pay cut, but at the same time, board pay sort of increased. And I think that disparity is really what investors don't want to see. They want to see a much more equitable distribution of rewards or of pay growth. And that's really an element of concern, which is becoming far more focused upon now, given that we are still sort of, reeling ourselves out of the COVID crisis.
There was a time when this would have been unthinkable, or to even question what the remuneration is, and is it very far away from the median range. Now it's being questioned. Why is the top management's remuneration 57 times, 58 times of the median range? Is that fair? Mohandas Pai joining us on the show this evening as well. Good evening, Mr. Pai. Are you welcoming this shareholder activism? Do you think it's a good thing to keep promoters and management on their toes, or do you think it doesn't really add value?
Well, I've always welcomed shareholder activism for a long period of time, for more than 35 years. I was a sort of a shareholder activist in the 1980s. We used to go to AGM just to make sure that they are on the toes. And I think shareholder activism is required for a very important reason. The shareholders are the owners of the corporation. They appoint their fiduciary agents as directors to rule on their behalf. And they must express their view, they must express their opinion. And SEBI has now come out with regulations which make sure that their voice can be heard. Because for very long, we had people who own more than 55, 60%. They put resolutions to vote, headed to the foregone conclusion because they have the majority voting rights. Now, SEBI has introduced the majority of the minority, which is very, very good to make sure that related party transactions or any benefits happening to people who have a controlling interest is not voted on by them. And now we are seeing an increase in shareholder activism, primarily because people feel that their voices will be heard. And of course, the institutions have been doing it for some time. Now I think SEBI has also imposed rules which make the mutual funds do more. And the recent activism in iShare was a very, very good thing, because in the COVID era there have been great pain for a lot of people. Many people have been laid off across India. I don't know about iShare, but giving a 10% rise, that a very large salary to the managing director at a point of time when the corporation has not done as well, corporation has suffered, sends a very wrong message. It's a very, very wrong message to others that performance and compensation doesn't matter. Compensation keep going on. And I think the shareholders voted to bring balance to this entire matter. So I welcome shareholder activism. I think we need much more of the shareholder activism in this country.
Anil Singhvi, why are the recent examples, and of course there are other issues as well that shareholders have brought up, but a lot of the recent examples that we've been seeing are focused on remuneration. Do you think that's an important point as well? Because shareholders now want some kind of a parameter to peg performance to remuneration, and it's not just whether the MD's performance, for example, has been great. It's also about what your average employee is getting. Is he or she getting a hike? What do you make of this trend? And do you think it's only because of the backdrop of COVID-19 and job losses and salary cuts?
No, I don't think it is on account of just the COVID and job losses. I think when you see the pattern for last almost about 5 years, you see the disparity between the managing director or some of the directors, whether promoter directors or outsiders, and look at the second rank and second tier of the people, and the gap between the two is so stark and rising. It's not a, I mean, in any situation, it's not a one-man job. Okay, if the corporation has done well, it's a team effort, and the team has to be rewarded. It can't be one man takes it all. I mean, it's not a game of poker. So at the end of the day today. And secondly, what Mohan has said is very true, that what we have been seeing for a very long time, that finally now the capital is speaking. Okay, you want to go around and seek the capital from all the investors, you make presentation how well you're doing. But when they start asking you some questions and you start questioning, oh, who are these shareholders? Why are they asking this question? We own 50%, 60% of the shareholding. So finally, at the end of the day, it is very important that capital should stand up and speak. And I'm glad that even today, small shareholders, because they have been actually, now they're discovering the power of the voting. And I think it holds good when you look at Indian democracy. 20 years back, the power of the vote, even in the electing the MLA or MLCs or MPs, were not even perceived by the people, because everyone thought that, okay, people just don't go and vote, and because the voting pattern was 30-40%. Now you're seeing 70-80% voting pattern, even in the democracy. The same thing is happening here. I think we take time. But when we arrive, I think India is unbeatable. In fact, according to me, over a period of time, we will become the most vibrant corporate democracy in the world. And second point I want to make here is that you raised a very important issue on how this whole thing will be, whether the remuneration or the related party transactions or independent directors' role and responsibilities. I think the stage and age has come where boards have to really take a cognition of that they can't be just clapping with both hands. They have to look at the conduct of the promoters, the remuneration paid to them, dividend paid to the shareholders, and more importantly, are they really the fiduciaries? I mean, oftentimes I have seen that they seen the company is doing well, managing director, because ultimately at the end of the day in India, we are hero worshipping country. I mean, one man and we all clap with both hands saying, oh, he's invincible. He's the man because of which the company has done well or the country has done well. At the end of the day, it is I think, the teamwork, and teamwork has to speak, and shareholders are now standing on their feet and voting. And two things have happened very clearly, as Mohan said, that the majority of the minority, and secondly, e-voting. So you sit in the comfort of your home and still can vote. You don't have to go to AGM. Like earlier companies used to have their registered offices in far-flung places where they ensured, including cancelling the flights, that the shareholders can't reach there. Now you don't have to go there. You sit at home and vote. And this is what the voting is all about, that every vote counts. And I'm very glad that e-voting has changed this whole the registered offices being in completely in areas which were not even seen on the atlas.
Yeah. The corporate democracy and coming of age of corporate democracy is such an important factor. J.N. Gupta, do you think this can actually get management to introspect, or do you think this can also become an obstacle in important decisions that managements want to take?
I have a slightly different take on this. So we are very happy and elated that one or two resolution got impacted and we are saying that we are changing. I would say not. Because in India, most of the company promoters have 50+% equity. So only those companies would suffer where promoters are not having 50+ equity. So there will be always a desire to cross the 50+. I would say the real thing would be when my members of nomination and remuneration committee, independent directors, when they see that investors have shown their dissent, even though resolution would have passed, but if you notice that 10% or 20% dissent is there, then you should think that something is rotten. And I will give you example of many cases which has happened in past where abusive related party transactions have passed because of the fact that people have not voted or the voting is participation is not there or some related parties have voted or some influential people have voted. Now, as far as Mr. Singhvi was saying that 1% is not a team, I 100% agree. But there are companies in India which believe in Mahabharat type of thing. 5 Pandav on one side and 1,000 Kauravs or 10,000 Kauravs on the other side. Take the example of Sun TV. Husband and wife take much more than what 1,800 employees are getting. So 1,800 employees are useless compared to two people. And if you count their other perks like a private jet which is not added to their remuneration, you will see what is the thing. Then comes a question where you have a family members, 4 or 5 family members as directors, executive directors, and everybody draws the same remuneration. Yesterday we were doing a report where three brothers are drawing 11.55 crores each. Now, we always say that even if you value the performance of the machine, three machines that you buy will not be performing the same over a period of time. So, how can the three man be performing that way? The problem lies is not only with the shareholder, problem lies with the directors. How can a director, I have seen situation where an independent director is saying, I am happy with 1 lakh commission, but I will pay 25 crore commission to the promoter. Now, if I am so worthless that a promoter who is attending the same number of meetings is worth 25 crore and I am worth only 1 crore, I should rather leave the company.
Yeah.
If I am so useless. So the issue is not the problem with the shareholder, not the problem with anything. Problem with the guys who are sitting in NRC and our independent director who are wagging tail in front of the promoters. Let them cut their tail and bark.
Wow, J.N. Gupta, I love the way you speak your mind so openly. The point being made here is that the gatekeepers have perhaps failed somewhere, which is why shareholders are now coming to the fore and it's long overdue. Hetal, let's talk about one important point. In many cases, the promoters have enough share and enough voting rights to really push their way through eventually. So this becomes tokenism in most cases. Do you think that's more prevalent?
If you look at the market structure, right, promoter shareholding across the market averages about 50-55%. The remaining 30% is institutional, and then we have the retail shareholders. So yes, to a large degree, promoters do have dominant equity in most companies. To say that, therefore, resolutions pass, yes, they do. There's a mathematical reality to it. The question is, I think rightly a lot of the panelists raised is, do they really listen to investors when there is so much of a pushback? What's happening slowly is that the more they don't listen to investors, the more tighter regulation is going to get. So, for example, there has been, earlier there was talk of the fact that should independent directors be appointed by a majority of minority? Will that therefore make them a little more sensitive to how investors are reacting and a lot less sensitive to, acquiescing to all promoter requests? That's one version, right? The fact that related party transactions came up with a majority of minority essentially is to say that, can I stop the financial leakages? And if the promoter is going to vote their, entire equity, then it obviously that's not going to happen. So I now move that to majority of minority. Remuneration, strangely, while it is very clearly a related party transaction, right? Promoters are voting their shares on their own remuneration. And that's really where that break needs to happen. If promoters continue to ignore, let's say, the investor vote and continue to behave in a certain particular manner, there is likely to be a regulatory enforcement on that as well. The minute that becomes, let's say, majority of minority, a lot of things will automatically correct, right? So yes, at this stage, resolutions pass. Are all promoters sensitive to investor voice? No. Some of them are. But the more corporate India behaves in this particular manner of ignoring the voice of shareholders, the more regulation is going to tighten and kick in. So I think from a larger perspective, one, it's important for corporate India to listen to how investors are sort of articulating their voice. The other piece is you look at what's happening on the investor side, right? If you look at how regulation has moved over the years from being voluntary for compliance for voluntary measures for corporate India to becoming mandatory measures for corporate India, you now have a set of regulations which are empowering investors, and their stewardship responsibilities are being enforced on asset managers. When you say stewardship responsibility, what does it mean? It essentially means that institutional investors are now stewards of their unit holders, and therefore they have to behave in a responsible manner, which means a, they have to vote on all shareholder resolutions, which they really didn't earlier, and now almost all asset classes have to. The second, of course, is that they now
Yes.
need to engage on a regular basis outside the voting arena on issues which are well beyond simply financial performance. So you now have investors, having conversations around social on pay parity, on gender diversity, not just at the board level, but also in the workforce. What are they doing on other environmental related issues? Are they looking at more greener versions of electricity generation, power consumption? So these are issues which are now becoming far more central. They're getting driven all round by the investor community, and therefore, beyond a point, companies will find it hard pressed to ignore.
Will companies be able to ignore beyond a point, or will they find a middle path? Mohandas Pai, let's look at what happened in the Siddharth Lal Aisher case. So, of course, first the shareholders voted against the increment, but then a week later, the board of directors came back, they reappointed Siddharth Lal, and they decided to cap his compensation to 1.5% of total profits as opposed to 3% of the bottom line, but they justified the hike, saying that the median that shareholders were looking at was actually incorrect because a lot of people also went who the low-paying employees went, higher-paying employees were brought in, and that's why that median was not completely representative. So they did also stick to their guns. They stood their ground. They made a little bit of a tweak to keep shareholders happy, and now they've asked for their view on postal ballot. So it's not as if companies are also, or managements are also bending over backwards to listen to shareholders, isn't it?
Well, my personal view is they are playing a fraud on the shareholders and corporate democracy. And I'll tell you why. The shareholders, the owners of the corporation, the directors proposed a resolution, the shareholders voted it out. Now, under what ethics will you say we're going to reappoint the person at a slightly tweaked salary? If you want to reappoint, you can recommend, let it go back to shareholder the tweaked salary and let them appoint again. Why reappoint? The reappointment, if at all, should be from the date the shareholders give an approval. Now you reappoint him, he takes charge right now, and then you go to shareholders, and then if the shareholders say no, due to whatever postal ballot or whatever it is, what happens in the interim? Now, these are issues which are a lacuna in the law. I hope the MCA and SEBI will step in to make sure that this is addressed. If the shareholders are rejected, if the directors want to go back to the shareholders, they must propose again, have a similar meeting like Anil said with e-voting, not postal ballots, because postal ballots could have leakages like it happened in the postal ballots in the United States. Remember all the trouble for the president's voting? We don't know what's going to happen, and whether it's going to reach them at all, we don't know, right? There's a problem, and I think they should go back for e-voting and not have the appointment or the remuneration take effect till the shareholders have reconsidered the resolution again. Now, there is a lacuna in the law. I hope MC and SEBI will plug it. But I don't know why the board is doing that. The board should consider this very well. They are appointed by the shareholders, not the promoter. They owe their allegiance to the shareholder. They're fiduciary agents of the shareholders, not the promoter. The promoter is also a shareholder. It is true. But in cases where anything is the benefit of the shareholder, they must make sure they have an arm's length and they do not do anything in law or in spirit which will reduce the faith the shareholders have in them as independent agents. Now, I think this is a very, very big test case. And I do hope the board of directors think about all these issues again and do not, try to override the views of the shareholders like this by saying that now we'll go to postal ballot. I think, like Anil said, e-voting is much better than postal ballot. Everybody can do it. Where the postal ballot, you're supposed to, fill it up and send on all kind of stuff. It may not reach. We don't know, right? So I think it's a very test case. I hope regulations come in to prevent that, like Hetal says.
Let me look at the flip side of it, Mr. Singhvi. And let's take remuneration as an example. Should there be a set transparent parameter which could be a deciding factor for both the board of directors as well as shareholders? I mean, it can't be random beyond a point to say that, okay, let's benchmark it to profitability, or let's benchmark it to median salary, or let's benchmark it to XYZ. Don't you think it's time for a clear-cut uniform parameter so there won't be mischief then in that case?
I think it's an important factor, what you have raised an issue here. But essentially, where this whole thing boils down to the role and responsibility of NRC. As Mohan rightly said, now appointing Siddharth Lal, according to me, the question should be raised that NRC, when they recommended earlier 3%, what were they doing? Did they think that company's performance really merited that 3% to be paid to him? Or 1%, 3% getting the profits? And if the resolution was defeated, according to me, they should have engaged first with those shareholders who voted against him before getting down to again saying that we want to tweak it. Instead of 3%, we'll again try our luck. 1.5%, if it goes through, is good. Now, this is not a role and responsibility for which they're elected, according to me. Otherwise, they should all quit. If they firmly believe that we can circumvent the law and do this, according to me, they should go home first. But if they choose to remain, then they must engage with the shareholders that if you voted against him, what was the reason? What is your concern about it? And we'll take into consideration the concern. If you keep on doing it and keep on testing that in some way or the other, this will get passed, okay? Be it electronic voting, postal ballot, something or the other. Right now, maybe we are in a COVID situation and maybe people are just not aware of it and we will get it. You can't use those kind of gimmicks. I mean, this doesn't behold. What are these NRCs guys doing? And how much the regulation will keep this kind of goalpost saying that, okay, NRC should be comprising of independent directors. They must take a view. They must compare. If they are feeling confused about it, let them hire some experts to give them opinion. Third point which I have is that who prepares the remuneration to be considered by the NRC is prepared by the company, right? So most vested guys are putting this that, okay, this is what the remuneration I want to have it. Now, what has NRC done? Have they appointed some experts? If they don't have the knowledge or expertise, they must appoint some and then do the benchmarking, have a complete presentation. And after having defeated on the vote on this matter, I think they must engage with the shareholders, get their views, go back to the Mr. Lal and explain to him that this was the reason. And we will only go by what shareholders' views are. Until then, you're not appointed because you can't have the situation that you appoint him again till such time the shareholders approve it. He takes all the decisions, which may not be acceptable. And suppose if he's voted out again, what happens? So these are the things I think we have to. And secondly, the question is again, we all are saying the same thing. All four of us, one minute, we all saying the same thing. the role and responsibility of the fiduciaries sitting on the board. Are they really discharging that in the right earnest and in the right interest of all stakeholders? It's not only the minority shareholders. Finally, it is the employees as well. Somebody is getting, like Mr. Gupta said, somebody is getting 200 crores salary, husband and wife put together. Now, obviously, the company is not run by two persons, not in entertainment and not in not on the area in which they are. For matter that for matter that any company on that. So I think that disparity and more will go for the gap between have and have nots. I think this kind of discourse and this will be there on that, because the people at the bottom of the rung in the corporate India are still paid peanuts and pittance. I think the time has come. We have to rise. We have to be a little more compassionate with this. And NRC's role and responsibility, more than audit committee and more than the board, it is NRC today which is coming under question mark on remuneration, and audit committee on related party transactions. These are the two ills. Sooner we correct it, better for it is. I think the laws are there, but people are circumventing the law day in, day out.
I want to add to what Anil says, and that
No,
is
it's also.
Now, to whom
Yes,
do
go
the
ahead.
NRC have a sense of responsibility? Is it to the
Absolutely.
promoter or the shareholders? I mean, to me, there's a conflict here, right? You are reappointing the same promoter who has a large stake. You're just twiddling, like Anil says, with a compensation. To whom do you have a responsibility? You are an appointee of the shareholder. You owe your responsibility to the shareholder, not to the promoter. And in this case, the promoter has a conflict of interest because you are deciding about his compensation. And the shareholders have said no. Now, again, you reappoint, again, you have compensation, again, you go back. I mean, to me, it sounds ridiculous. I'm sure J.N. will explain it in his inimitable style again.
No, so no, it's also become about cult personalities and them being challenged. That's also part of it. Mr. Gupta, I'm sure you want to come in on this discussion, but I want to broaden the scope of the question a little bit and make it more contextual to what we have seen in the last 18 months in terms of the profile of shareholders as well. We've discussed ad nauseum. Everyone knows how the depth of the equity market has increased. You have this whole new crop of younger investors, newer investors, millennial, Gen Z, whatever you may call them, also getting into the stock market, buying, companies, sometimes trading them and, learning the ropes per se. Are they aware of their rights as shareholders? How do we ensure there is wider participation so that this kind of shareholder activism or rather shareholder awareness only grows further?
I would say, as Mohan has asked me to explain in my style, so I am bound to do that. I would say rather than doing the training of independent directors, what is needed is take all the directors and put them under that famous banyan tree under which Buddha got enlightenment. Okay, so that is how the directors will understand what is their duty toward the society, what is their duty toward the shareholder. The problem is all the directors who are putting there, they must have been the first class scholars in their life. And when I was a student, if I did not get 100% marks, I would have a stomach ache that why my 10 marks have been cut. So the same stomach ache should happen to those directors when they get 10% or 20% vote against the proposals which they have proposed. The issue is that how deep in the market may happen, how the broad the shareholder happen. As long as promoters have majority shareholder 50% or more than that or even 40%, because most of the shareholders do not wait. If you had seen 3 days back, there was a headline in the newspaper, shareholders defeat another resolution in Balaji. I would say it was not a case of activism. It was a total case of inactivism, where only 0.2% shareholders have voted. In entire voting, only 0.2% shareholders have voted and resolution is defeated. So it is an extreme case of inactivism. The issue is very clear. SEBI, MCA, government, you, me, we can shout at the rooftop. Unless until the conscience is awakened in the board members, we are going to see only stray cases of Siddharth Lal or something happen. in recently concluded JSPL transaction.
Hmm.
It is the most abusive transaction I have ever seen. And the shareholders have voted, institutional shareholders have voted. And it has been cleverly drafted. People have been made a fool, but yes, it has happened. So the issue is not me, not Mohan, not Anil, not Hetal, or not news channels. The thing have to happen at the board level. The day they realize that they have been put at that place
Yeah.
as an important role. It is like that. When a judge sits in the Supreme Court or High Court, he feels that he has a duty. The same duty has to, the sense of duty has to come to all those directors. Problem is that I am bothered that if
Yeah.
I retire,
No.
I am getting some money. If I speak, my money will stop coming. The law has provided you 5 year fixed term. Still, you
Yeah.
are bothered because you want second term. The other thing is that if you resign from this company, nobody else will take you. That is the problem because the bonhomie is such that if I raise my voice in a company A, XYZ or all 26 alphabet company will never appoint me because I am a troublemaker.
So
That's the
at
problem.
least shareholders are now shining a light on this cozy club. At least a light is being shone on this cozy club. Will it stop managements from overriding or riding roughshod over what shareholders are telling them? Well, we can only hope so. At least a start has been made. Thank you so much to all of you for joining us on this
Thank you.
very interesting debate.